Welcome to Market Minds, the podcast where we explore the fascinating intersection of finance and technology. I'm your host, Arabella, and today we're diving into something truly revolutionary: how to train an AI agent that thinks and predicts like stock market legends. I'm thrilled to be joined by two incredible guests who are at the forefront of this exciting field. Adam, a veteran AI engineer with extensive experience in financial models, and Jerry, a former Wall Street analyst turned AI consultant. Welcome to you both.
Thanks for having me, Arabella. I've spent the last decade developing AI systems that analyze market patterns, and I'm excited to break down how anyone can build an AI assistant that thinks more like Warren Buffett than a calculator.
Great to be here. After 15 years analyzing market trends from major investment firms, I became fascinated with how AI could capture the intuition of legendary investors. It's not just about algorithms. It's about teaching machines to understand sentiment, context, and human behavior.
We've got so much to cover today, from teaching AI to see beyond numbers, embedding the wisdom of market legends, to understanding why most trading bots fail. By the end of our conversation, even beginners will understand how AI can help make smarter investment decisions without replacing human judgment. Let's dive into our first topic: understanding the market beyond just numbers. This seems like the foundation for building an AI that thinks like a legendary investor. Adam, why is this so crucial?
Great question, Arabella. The biggest mistake people make is thinking the stock market is just spreadsheets and charts. It's not. It's human psychology wrapped in numbers. Warren Buffett doesn't just analyze PE ratios. He reads thousands of pages to understand company culture and market sentiment.
Exactly. During my Wall Street days, I noticed the most successful investors weren't necessarily math geniuses. They were the ones who could read emotions in the market. Fear, greed, excitement. These drive prices more than any algorithm.
For beginners trying to build an AI assistant, this means your first step isn't downloading price data. It's teaching your AI to interpret news headlines, social media sentiment, even the tone of earnings calls.
So we're basically teaching computers to understand human behavior. That sounds incredibly challenging.
It is. But modern AI tools can now analyze text for emotional tone, track social media trends, and identify patterns in investor behavior that might signal the next market move. That's the foundation of market wisdom.
So we've established that the market is more than just numbers. But how exactly do we teach an AI to see the market through a more human lens? Adam, what's involved in that process?
It's about teaching AI to recognize patterns in things that don't look like patterns to computers. For beginners, think of it this way. Instead of just feeding stock prices to your AI, you're teaching it to read news headlines and understand if they're positive or negative.
Exactly. When I first started in this field, I realized we needed to simplify. A beginner can start with basic sentiment analysis, teaching AI to recognize words like soaring, plummeting, or unexpected in financial news and understand their impact.
The beauty is that today's tools make this accessible. You don't need a PhD anymore. Services like OpenAI let you create systems that can read an earnings call transcript and tell you if the CEO sounds confident or nervous.
That's fascinating. So we're essentially teaching machines to read emotional cues that might influence stock prices.
Yes, and beginners can start small. Even tracking simple things like how often a company is mentioned on social media can provide insights that pure price data misses. It's about teaching AI to notice what human investors notice.
Let's talk about natural language processing, or NLP as it's commonly known. This seems to be at the heart of teaching AI to understand market sentiment. Adam, can you explain NLP in simple terms for our listeners who might be completely new to this concept?
Of course. Think of NLP as teaching computers to understand human language. At its simplest, it's how AI can read a news headline like Company X exceeds expectations and understand that's positive. For beginners, NLP is the bridge between all those text sources. news articles, social media posts, company reports, and actionable insights.
Exactly. And you don't need to be a programmer to use it. There are now tools where you can simply feed in financial texts, and the NLP will highlight if the language sounds optimistic or concerned. This is how legends like Buffett operate. They read between the lines.
So how would someone just starting out actually use this technology?
Start small. There are user-friendly platforms that can analyze earnings, call transcripts, and tell you if executives sound confident or nervous. These emotional cues often predict stock movements before the numbers do.
And remember, you're not building a supercomputer here. Think of it like training a research assistant who reads thousands of articles while you sleep, then highlights the important patterns human investors might miss.
Now let's talk about something truly fascinating, embedding the wisdom of market legends into AI. How do we actually capture the thinking patterns of people like Warren Buffett or Peter Lynch in code? Jerry, is this even possible?
It's definitely possible. Possible, Arabella, though not perfect. Think of it like creating a digital apprentice that studies under these legends. For beginners, the simplest approach is feeding an AI their written wisdom. Annual shareholder letters, interviews, books. These contain their decision-making patterns.
Exactly. And you don't need to be a coding expert. Tools like GPT can analyze these writings and extract principles. For instance, Buffett emphasizes understanding business fundamentals over short-term price movements. We can program that preference into AI decision-making.
So you're essentially teaching the AI their investment philosophy.
Precisely. It's like creating a digital mentor. The AI can remind you to ask, would Buffett buy this company? And then help analyze based on his criteria: strong management, competitive advantages, reasonable price.
And for beginners, start small. You don't need to capture everything at once. Pick one legend's approach that resonates with you, focus on their core principles, and build from there.
Let's shift to something fascinating: behavioral finance. This field explores how psychology affects financial decisions. How does this connect to training AI that thinks like market legends, Jerry?
It's absolutely central, Arabella. Behavioral finance teaches us that humans aren't rational with money. We panic sell during crashes and buy at peaks due to FOMO. The market legends understand these patterns. For beginners, think of it like teaching your AI to recognize when everyone is being greedy or fearful.
Exactly. Warren Buffett's famous quote, "Be fearful when others are greedy and greedy when others are fearful," isn't just clever. It's behavioral finance in action. A beginner can teach AI to track simple sentiment indicators that show market extremes.
So how would someone start incorporating this into their AI assistant?
Start with fear and greed indexes. There are public ones anyone can access. When these indicators hit extremes, have your AI alert you. It's like having Buffett's instincts, simplified.
And remember, the goal isn't perfect prediction. It's recognizing when human emotions are driving prices away from fundamental value. Even simple tools can help beginners spot these moments of opportunity.
Adam, you mentioned building an AI that thinks like Warren Buffett, but we haven't discussed the risks. How do we create predictive models with proper safeguards for beginners?
That's crucial, Arabella. For beginners, think of guardrails like training wheels. You wouldn't give a novice investor control of $1 billion portfolio, and you shouldn't give an AI unlimited trading power either.
Exactly. Start with simple boundaries, maximum investment amounts, stop-loss limits, and daily trading caps. The AI might suggest buying Tesla when Elon tweets something positive, but you need limits on how much it can invest based on just one signal.
So it's not about letting the AI make autonomous decisions.
Definitely not, especially for beginners. Think of it more as an advisor than a trader. Have it flag opportunities with explanations like, I'm seeing increased positive sentiment for Company X across news outlets and Reddit. Then you decide.
And add time-based guardrails too. Legends like Buffett are patient. Program your eye to cool down after making recommendations, preventing emotional trading spirals that even humans fall into.
I love that approach, augmenting human decisions rather than replacing them. Let's talk about putting all this knowledge into action. How do we actually integrate these AI insights into real-time trading decisions without getting overwhelmed? Adam, what does this look like for a complete beginner?
This is where it gets exciting, Arabella. For beginners, the simplest approach is creating an AI dashboard that sends you alerts. You don't need to code complex trading algorithms. Start with something basic that says, hey, Company X is showing positive sentiment across news sites, and it matches Buffett's criteria for good management.
Absolutely. Well, a practical way to start is connecting free tools like Google Alerts to track company mentions. Then having your AI assistant summarize this information each morning before markets open. It's like having a research intern who works 24/7.
That sounds much more approachable than I expected. But how does a beginner ensure they're not just automating bad decisions?
Great question. Always start in observer mode. Have your AI make recommendations for a few weeks without acting on them. Track its success rate. This teaches you and the AI simultaneously.
And remember, even legends like Buffett don't trade daily. Program your AI to appreciate patience. The best systems don't just tell you when to buy. They tell you when to do nothing at all.
We've talked a lot about technology and strategies, but what about the human qualities that make investors like Buffett so successful? How do we build curiosity, patience, and humility into our AI system?
That's such an important point, Arabella. Many people overlook these intangibles. Take curiosity. Legendary investors are voracious readers. I've designed simple AI systems that automatically collect diverse information sources rather than just financial data. Even beginners can set this up.
Absolutely. For patience, beginners can program simple cooling off periods. Your AI shouldn't recommend buying something today just because it's trending on Twitter. I built a basic system that waits 48 hours before confirming a recommendation, mimicking how Buffett avoids impulsive decisions.
And what about humility? That seems particularly difficult to program.
It's about uncertainty tracking. Even beginners can have their AI express confidence levels with each prediction. Instead of saying, buy this stock, it says, I'm 65% confident this looks promising based on these factors.
The real magic happens when these qualities work together. A humble AI acknowledges market uncertainty. A curious one keeps learning. And a patient one doesn't panic during downturns. That's when it truly starts thinking like a legend.
We've explored how to build AI that thinks like market legends, but here's a curious question. Why do most AI trading bots fail? Adam, you've seen many systems crash and burn. What's the fundamental problem?
It's simple, Arabella. Most bots fail because they're built on a false premise, that markets are purely mathematical. Beginners often download price data, apply some indicators, and expect magic. But they're missing everything we've discussed: sentiment, psychology, context.
Exactly. I've evaluated dozens of trading algorithms that performed brilliantly in backtests, but collapsed in real markets. They weren't designed to handle unexpected events, pandemic lockdowns, surprise interest rate hikes, or viral tweets from CEOs.
So what's the biggest mistake beginners make?
Overfitting. They train systems that work perfectly on historical data but can't adapt to new situations. It's like memorizing answers to last year's exam, useless when the questions change.
And they forget that markets evolve. What worked in 2019 might fail in April 3. That's why legendary investors constantly read, learn, and adapt. Capabilities beginners rarely build into their systems.
The solution is starting small, not with complex algorithms, but with systems that help you understand what's happening in the market right now, explained in plain English.
Let's get practical now. We've discussed the theory, but what actual steps can beginners take to start building their market legend AI today? Adam, I've heard you mention Relevance AI as a potential tool. Could you explain what that is and how someone with zero technical background might use it?
Absolutely, Arabella. Relevance AI is like training wheels for beginners in this space. It helps organize messy market data without requiring coding skills. Think of Reddit discussions, news articles, earnings calls. Relevance AI can categorize all that chatter into patterns a beginner can actually understand.
What I love about tools like this is they bridge the gap between complex AI and practical use. A complete beginner can upload financial news articles, and Relevance will highlight patterns, like increasing mentions of recession or growth opportunity. That might signal market shifts.
So someone with no background could actually build something useful.
Definitely. The platform lets you create simple dashboards that track sentiment around stocks you're interested in. It might show you that while Apple's numbers look good, online chatter has turned negative, something legends like Buffett would notice.
The key advantage is explainability. Your AI won't just say, buy this stock. It'll say, consider buying because retail sentiment improved after the product launch. That transparency helps beginners learn while they build.
We've talked about the types of data our AI needs, but organizing that data seems like a crucial step. How should beginners approach this without getting overwhelmed?
This is where many beginners trip up, Arabella. They collect tons of data but can't make sense of it. Start simple. Categorize your information into 3 buckets: market data like prices, sentiment data from news and social media, and fundamentals like earnings reports.
Exactly. Think of it like organizing your kitchen. You wouldn't put spices in the fridge or milk in the pantry. Similarly, your AI needs clearly labeled data sources to make sense of them.
What tools can help beginners with this organization process?
Simple spreadsheets are a great starting point. As you advance, tools like Relevance AI can automatically categorize news articles or social media posts by sentiment or topic without any coding.
Remember, organization isn't just about storage, it's about connections. Your AI needs to understand that a negative earnings report, dropping stock price, and negative tweets might all relate to the same event. That's how it starts thinking like Buffett instead of just a calculator.
I'm curious about 2 terms we keep mentioning: clustering and sentiment analysis. These sound technical, but they seem essential for beginners. Could you break these down, Jerry?
Absolutely. Think of clustering as organizing similar ideas together, like sorting your mail. When training your AI, it might group Reddit posts about Tesla into categories like product excitement or management concerns automatically, without you having to label everything manually.
And for beginners, sentiment analysis is simply teaching your AI to understand if something is positive, negative, or neutral. Is a news article about Apple optimistic or worried? These tools can now detect that tone, which is exactly what market legends do instinctively.
So how would someone with zero technical background actually use this?
Start with pre-built tools that do the heavy lifting. You could use something like Relevance AI to automatically sort financial news into positive or negative buckets without writing code. Then you'd start seeing patterns. Maybe negative news doesn't affect certain stocks as much as others.
The beauty is in simplicity. Even just tracking if Reddit mentions of a company are mostly excited or concerned gives you insight that pure price charts miss. Legendary investors do this manually. Your AI assistant can do it at scale.
We've covered a lot of ground on building AI that thinks like market legends, but now let's talk about something really exciting: creating your own personal investor co-pilot. Adam, how can beginners actually build something customized to their own needs?
This is where it gets fun, Arabella. Think of it like building your own mini Buffett that sits on your shoulder. For complete beginners, start by defining what you want your co-pilot to do. Maybe you just want alerts when sentiment shifts dramatically on stocks you own, or perhaps you want help understanding earnings reports in plain English.
Exactly. And contrary to what many think, You don't need to build it all at once. Start with one simple function, maybe just tracking social media mentions of your favorite stocks. Then gradually add capabilities like news sentiment or earnings call analysis as you get comfortable.
That's much less intimidating than trying to build the perfect system from day one.
Absolutely. And remember, personalization is key. If you're a patient investor like Buffett, program your co-pilot to ignore daily price movements and focus on long-term fundamentals. If you're more active, you might want it to alert you to sudden sentiment shifts.
The beauty is that today's tools let you create something uniquely yours without writing code. Your co-pilot should reflect your investment style, risk tolerance, and the market legends you admire most.
We've been discussing all these sophisticated AI techniques, but there's something fundamental we haven't touched on yet: explainability. Why should AI systems explain their thinking, and why is this especially important for beginners?
This is critical, Arabella. Imagine getting a stock recommendation from a black box that just says, "Buy Apple," with no reasoning. Would you trust it? Legends like Buffett always explain their thinking. Your AI needs to do the same.
Exactly. For beginners especially, the explanation is more valuable than the prediction. When your AI says, "I recommend company X because their positive mentions on social media increased 40% while their competitors are receiving negative coverage," you're learning while investing.
That makes so much sense. It's like having a mentor rather than just a trading signal.
Beginners need to build trust gradually. When your AI explains its reasoning, you can decide if it makes sense to you. Sometimes you'll disagree with its logic, and that's perfectly fine.
And simple explainability features are easy to implement even for beginners. Have your AI include a because statement with every recommendation. That alone transforms a mysterious prediction into a learning opportunity.
As we wrap up, let's address some common questions our listeners might have about using AI for stock trading. Adam, what's the number one question you get from beginners?
Without fail, it's, can AI actually beat the market consistently? The honest answer is no, not really. AI isn't a magic money machine, but what it can do is reduce your emotional biases, help you process information faster, and improve your decision-making. For beginners, that's huge.
I'd add that many people ask if this technology is safe for beginner investors. It absolutely can be, but only if you treat it as a co-pilot, not a self-driving car. Always review the insights before acting on them.
What about the future? Where do you see this technology heading in the next few years?
We're moving toward more personalized AI assistants that adapt to your specific investing style. Imagine an AI that knows you prefer dividend stocks and automatically filters information through that lens.
And accessibility is improving rapidly. What required a team of engineers just 2 years ago, a complete beginner can now set up in an afternoon. Soon, having an AI investing assistant will be as common as having a navigation app on your phone.
We've covered so much ground today, from understanding the market beyond numbers to building custom investor co-pilots. Before we wrap up, I'd love to hear your final thoughts on the future of AI in investing. Adam, what's your big takeaway for beginners who want to start building their own market legend AI?
The most important thing to remember is that AI isn't magic. It's a tool that helps you think better. Start small, focus on understanding rather than prediction, and don't try to automate everything at once. The beauty of today's technology is that complete beginners can build something genuinely useful without any coding experience.
I'd add that the future belongs to hybrid approaches, combining AI insights with human judgment. The legends we've discussed all have something computers struggle with: wisdom. But by teaching AI to recognize patterns in sentiment and behavior, beginners can develop systems that help them invest more like these legends, even without decades of experience.
That's fantastic advice. Now I ask this question to all my guests. If you had to distill everything we've discussed into one sentence that a complete beginner could write on a sticky note above their computer, what would it be?
Build an AI that explains the market, not one that claims to beat it.
Let your eye read the news, but let your human brain make the decisions.
Brilliant. Thank you both for sharing your expertise, and thank you all for listening to Market Minds. Until next time, invest wisely.